Hello and welcome to Straight Up by EdexLive. I'm Saumya Solanki and today we are talking about something that's been at the center of a wave of misinformation and fake news. Even though the authorities have issued clarifications, the confusion hasn't died down, and that's exactly why you should know the facts. For many, it might sound like a boring topic, but trust me, it's going to affect every working adult in India and eventually you too. The Revised Income Tax Bill 2025. We'll get into what's new, why the earlier version got scrapped, and why this matters. The government has withdrawn the version it introduced in February and will table a revised draft in the Lok Sabha on August 11. So, here's the story. Back in February this year, the government introduced the Income Tax Bill 2025 in Parliament to replace our ancient Income Tax Act of 1961. That law had been around for over 60 years, patched up more than 65 times with over 4,000 amendments. Basically, it was due for an overhaul. But after the bill was introduced, a parliamentary select committee reviewed it and gave 285 recommendations, most of which were about making the language simpler and the law more easy to understand. The government took those suggestions, added more tweaks from other stakeholders, and decided that rather than passing the old draft with endless changes, they would just bring a new, cleaner version. Now, let's talk about what's actually changing. First, tax refunds. The old draft had a rule that if you missed the income tax return deadline, you couldn't get a refund at all. Harsh, right? Well, that's gone now. Even if you file late, you can still get your refund. Second, intercorporate dividends. This is more for companies, but basically a tax deduction under Section 80M that got accidentally left out in the earlier draft is back in. Third, nil TDS certificates. If you meet certain conditions, you can get a certificate saying no tax will be deducted at source from your income. That means more cash in hand immediately instead of waiting for refunds. Fourth, anonymous donations to trusts. If a trust is purely religious, any anonymous donations to it will be tax-free. But if the trust also runs hospitals or schools, the exemption doesn't apply. Fifth, a more digital and automated tax system. The goal here is to make the process of paying taxes as faceless as possible, thereby reducing opportunities for corruption, making life easier for taxpayers. Last month, there were whispers that this new bill would change capital gains tax rates. The Income Tax Department literally had to post on X stating that the bill's objective is language simplification and removal of redundant or obsolete provisions, not altering tax rates. Tax experts are pointing out that the earlier clauses requiring taxpayers to file returns on time merely to claim refunds often cause difficulties for those who miss deadlines due to genuine reasons. That's why the Finance Ministry removed it. The revised bill will be tabled in the Lok Sabha on August 11. Once passed, it will finally replace the 1961 Act, simplify compliance, and hopefully make the taxpayer experience less of a headache. That's all for now. For more such informative videos and trending topics, follow us on social media and stay tuned to EdexLive. See you next time.